I was just looking for the stock page. Here it is. Looking for the quotes. Gotta check the quotes. Love a good quote. Oh, IBM up a quarter.
So you're in the market?
Oh, yeah. I'm in the market.
Which market?
Which market? The big one. The big market, the big boy. Bull market, bear market, you name the market, I'm there.
A wide moat dividend growth stock. I wish I bought more Estee Lauder EL stock at this price. Let's talk about the Estee Lauder Companies Incorporation on New York Stock Exchange. Ticker EL. The company's shares saw a significant share price rise of over 20% in the past couple of months on the New York Stock Exchange. As a large cap stock with high coverage by analysts, you could assume that any recent changes in the company's outlook is already priced into the stock. However, could the stock still be trading at a relatively cheap price? Let's examine Estee Lauder Company's valuation and outlook in more detail to determine if there's still a bargain opportunity. What's the opportunity in Estee Lauder Companies?
How you like that? How you like that? Now, look at you, now look at me. Look at you.
According to my valuation model, Estee Lauder Companies seems to be fairly priced at around 1.7% below my intrinsic value, which means if you buy Estee Lauder Companies today, you'd be paying a reasonable price for it. And if you believe that the stock is really worth $146.12, then there isn't much room for the share price to grow beyond what it's currently trading. So, is there another chance to buy low in the future? Given that Estee Lauder Company's share is fairly volatile, its price movements are magnified relative to the rest of the market. This could mean the price can sink lower, giving us an opportunity to buy later on. This is based on its high beta, which is a good indicator for share price volatility. Investors looking for growth in their portfolio may want to consider the prospects of a company before buying its shares. Buying a great company with a robust outlook at a cheap price is always a good investment. So let's also take a look at the company's future expectations. With profit expected to more than double over the next couple of years, the future seems bright for Estee Lauder Companies. It looks like higher cash flow is on the cards for the stock, which should feed into higher share valuation. Chinese tourists are back. They just aren't shopping like before. The retail world used to cater to Chinese tourists. Luxury shops opened wherever they went, and Parisian department stores hired Mandarin speakers. Mom and pop stores in Hong Kong were replaced by vendors offering products Chinese tourists demanded, such as milk powder and medicines. Now, after being grounded for 3 years during the pandemic, Chinese travelers are taking to the skies again, but they don't look or spend the same amount of money. The new wave of traveling shoppers is dominated by people under 40, and they are forging less of a well-traveled path, eschewing the big bus tours that drop off tourists at malls and shopping districts. Many use an app called Shou Hongshu, nicknamed China's Instagram and translated as the Little Red Book. It helps them find new spots to visit and take selfies. That is affecting companies that have made big bets on travel retail or operating stores in tourists' favorite destinations. The cosmetics company Estée Lauder saw its shares drop sharply on November 1st after a profit warning that was primarily driven by expected pressures on its Asia travel retail business and a slower than expected recovery in mainland China. The company has invested in stores at various checkpoints of travelers' journeys, at airport gates, border shops, shopping malls, in popular tourist destinations and duty-free zones. Last month, Shiseido, a Japanese rival, cut its full-year profit forecast by 36%, citing weakness in its China and travel retail segments. Luxury companies such as France's LVMH have been downgraded by analysts, including Barclays, because of softer demand from Chinese consumers. In late November, the luxury department store Harvey Nichols, which sells brands such as Oscar de la Renta, 3.1 Philip Lim, and Red Valentino, along with beauty lines such as Chanel and some of Estee Lauder's products, said it would be closing one of its 2 stores in downtown Hong Kong. Chinese tourists coming to Hong Kong are no longer focused on shopping as they used to be before the pandemic. Dixon Concepts, the operating company for Harvey Nichols, said in a regulatory filing, this has now been proven despite the reopening of the borders in February, he said. The company has also pointed to the significant growth of e-commerce during the pandemic, the rapid development of the luxury brand's presence in China, and the narrowing of price differences between China and Hong Kong, a trend mirrored in favorite Chinese tourist destinations. Estée Lauder said it expects travel retail to continue reaching new customers globally in the long term. Yun Jin Huan, a 24-year-old export executive from Guangdong province, was on a day trip to Hong Kong on a recent Saturday, armed with the advice of Xiaohongshu, the social media app. She and a friend were posing for photos along the waterfront in the city's Kennedy Town neighborhood. The spot has become so popular with tourists, some step into traffic to get the perfect shot of the sunset, that the government put up signs along the road. Do not stay and take photos. On-carriageway offenders are liable to prosecution. Like many tourists from the mainland these days, Yu is less interested in shopping and more interested in punching in, or daka in Mandarin, a term many use to represent the bingo-like drive to visit as many trendy spots as possible. For many tourists, sometimes armed with professional cameras, getting that image of themselves in a coveted destination has become the ultimate souvenir. I can buy anything I want online in China, said Yu, who used to come to Hong Kong on day trips just to buy cosmetics. Now I'm seeking different things on my trips. I want to get an authentic experience. After taking their waterfront photos, Yu and her friend were planning to go on one of the many city walks recommended by the app. Social media apps such as Xiaohongshu have played an important role in shaping the behavior of young, relatively wealthy, and educated tourists, said Jian Lin, a media scholar who studies digital platforms and cultures at the Chinese University of Hong Kong. Lin himself has visited the app to find it very interesting places and cafes, using it on a recent trip to Dali, a cultural city popular with tourists in China's southwestern Yunnan province. On Chow Hong Shu, which also features beauty and pets and relationship advice, users pose for photos in famous places. Shopping, though, is no longer as popular as traveling activities, data shows. Young Chinese travelers have emerged as the main force in outbound tourism, taking the lead in shaping the preferences and consumption patterns of the market, said Subramania Bhatt, who heads up China Trading Desk, which tracks travel data through its own quarterly survey. Around 63% of the travelers are under the age of 40, according to the company's data, while its most recent survey suggests that there's a growing inclination toward creating personal travel narratives, and that shopping is taking a backseat. Part of that is related to a weakened Chinese economy that is digging into discretionary budgets. While many Chinese are increasingly shopping at home, some signs point to the appetite for travel coming back. During the recent Double 11 shopping festival, more than 400,000 ticket packages, including all-you-can-fly passes and nearly 2.5 million accommodation packages, were sold, according to Fliggy, a travel platform owned by Alibaba Group. Fliggy particularly highlighted the preferences toward more flexible travel options, while domestic sales in China for the luggage maker Samsonite have accelerated in recent months. Purchases by Chinese tourists abroad, for example, those buying luggage in Europe to bring home their shopping hauls, are still catching up. Based on data Samsonite tracks, including credit card information on country of origin of purchases at its stores, the company estimates that Chinese outbound travel is still about 50% of pre-pandemic levels. Samsonite expects sales from these customers to continue rising. In recent months, launching its biggest ad campaign in cities across China, we think Chinese tourists will really be back by the end of 2024, said Kyle Gendro, the company's chief executive. We are ready for the comeback. Are you a potential investor? If you've been keeping an eye on EL, now may not be the most optimal time to buy, given it's trading around its fair value. However, the optimistic prospect is encouraging for the company, which means it's worth further examining other factors such as the strength of its balance sheet in order to take advantage of the next price drop. I wish I could have bought more of this when it was traded at $110.